The world is facing a growing debt crisis. Governments are grappling with massive budget deficits. They must maintain essential public services while managing their debt. Some experts are turning to Bitcoin and cryptocurrencies. Traditional debt management methods are under strain. Economic uncertainty and geopolitical instability add to the challenge. Bitcoin's rise introduces a new element into this complex equation. It has sparked debate about its role in addressing sovereign debt. Critics raise concerns about Bitcoin's volatility and potential illicit use. The debate over Bitcoin's role in managing government debt is complex. Exploring all viable solutions is crucial. Bitcoin may offer potential solutions, but caution is needed. Bitcoin, a decentralized digital currency, has emerged as a potential tool for governments struggling with debt. Its unique characteristics, such as its limited supply and independence from central banks, have sparked interest among some economists and policymakers. They see it as a possible solution to address the mounting debt crisis. One of Bitcoin's key features is its decentralized nature. It operates on a distributed ledger technology called blockchain. This means that no single entity controls Bitcoin. This distinguishes it from traditional fiat currencies, which are issued and controlled by central banks. Proponents argue that this decentralization makes Bitcoin more resistant to manipulation and inflation. Another factor contributing to Bitcoin's appeal is its limited supply. Unlike fiat currencies, which can be printed indefinitely by central banks, Bitcoin has a fixed supply cap of 21 million coins. This scarcity is written into Bitcoin's code. This is a major difference compared to traditional currencies. Furthermore, Bitcoin has shown significant price appreciation since its inception. Some proponents believe that governments could potentially benefit from holding Bitcoin as a reserve asset. They argue that Bitcoin's appreciation could offset national debt, especially in the context of a depreciating fiat currency. Bitcoin's inherent scarcity could encourage fiscal discipline among governments. Its fixed supply and decentralized nature make it resistant to inflationary monetary policies. This stands in contrast to traditional fiat currencies, which can be printed excessively, leading to inflation and devaluation. When governments are limited by the scarcity of Bitcoin, they may be more inclined to adopt responsible spending habits. This is because they cannot simply print more Bitcoin to cover their expenses. This could potentially lead to more sustainable fiscal policies in the long run. Moreover, Bitcoin's transparency could enhance accountability. All Bitcoin transactions are recorded on the public blockchain, making it possible to track government spending. This transparency could help to reduce corruption and promote responsible use of public funds. The principles of scarcity and transparency embedded in Bitcoin's design could contribute to a more disciplined and accountable approach to government finances. However, it is important to acknowledge that adopting Bitcoin as a solution for fiscal discipline is not without its challenges. Section 4. Regulatory challenges and concerns. Despite its potential benefits, Bitcoin also presents significant regulatory challenges and concerns for governments. Its decentralized nature, while a strength in some aspects, also makes it difficult to regulate and control. This has led to hesitation and uncertainty among policymakers worldwide. One of the primary concerns is Bitcoin's potential use in illicit activities. Due to its anonymity and ability to facilitate cross-border transactions, Bitcoin has been used in money laundering, tax evasion, and other illegal activities. This has led to calls for stricter regulations to prevent such activities and ensure the integrity of the financial system. Another challenge is the volatility of Bitcoin's price. Its value can fluctuate significantly in short periods, making it a risky asset for governments to hold. This volatility could undermine the stability of government finances if Bitcoin were to be used as a reserve currency or a means of debt management. Moreover, the lack of a central authority governing Bitcoin raises concerns about consumer protection and market manipulation. Unlike traditional financial institutions, there is no central entity to provide oversight or recourse for users in case of fraud or disputes. Section 5. Real-world examples and expert opinions. Despite challenges, some governments are exploring Bitcoin and cryptocurrencies. El Salvador adopted Bitcoin as legal tender in 2021. The move aimed to promote financial inclusion but faced criticism. Other countries, like China and the Bahamas, launched central bank digital currencies. Expert opinions on Bitcoin for government debt management are divided. Some argue Bitcoin's fixed supply makes it a superior store of value. Section 6. Risks and criticisms of Bitcoin as a solution. While Bitcoin offers intriguing possibilities for addressing government debt, it is crucial to acknowledge the significant risks and criticisms associated with its use. Critics argue that Bitcoin's volatility, limited adoption, and potential for illicit activities outweigh its potential benefits. One of the primary criticisms is Bitcoin's volatility. Its price can fluctuate wildly, making it a risky asset for governments to hold. A sudden drop in Bitcoin's value could exacerbate debt problems rather than alleviate them. This volatility stems from Bitcoin's relatively small market size and susceptibility to market manipulation. Another concern is Bitcoin's limited adoption as a medium of exchange. While Bitcoin has gained popularity as an investment asset, it is not widely accepted for everyday transactions. This limited adoption hinders its ability to function effectively as a currency for government spending and debt repayment. Furthermore, critics argue that Bitcoin's decentralized nature and anonymity make it attractive for illicit activities. Its use in money laundering, tax evasion, and other criminal enterprises poses a significant challenge for governments seeking to maintain financial stability and the rule of law. Section 7. Weighing the benefits and risks. A look ahead. The use of Bitcoin and cryptocurrencies for managing government debt presents a complex and evolving landscape. While Bitcoin offers potential benefits such as fiscal discipline and a hedge against inflation, it also carries significant risks, including volatility, limited adoption, and regulatory challenges. Governments must carefully weigh the potential benefits and risks before considering Bitcoin as a solution for their debt challenges. A thorough assessment of the technology, its implications for financial stability, and its potential impact on existing regulatory frameworks is essential. Looking ahead, the role of Bitcoin and cryptocurrencies in the global financial system is likely to remain a topic of debate and exploration. As the technology matures and regulatory frameworks adapt, the potential benefits and risks of Bitcoin for government debt management will become clearer. In the meantime, governments should proceed with caution, engaging in thorough research, fostering dialogue among stakeholders, and considering the long-term implications of adopting such innovative but potentially disruptive technologies. The future of finance is uncertain, but Bitcoin and cryptocurrencies will undoubtedly play a role in shaping it.